Hello there, welcome to this edition of Global Business Africa. Over the next 30 minutes, we'll make a speed run through all the key business news stories you need to know about from all corners of the continent. Cairo, Lagos, Johannesburg and Nairobi are starting points tonight. Here's what's coming up. Going nuclear, South Africa and Russia to proceed with the $10 billion nuclear power deal. We'll also be looking at Egypt's latest efforts to resolve its political, social and economic woes. And Somalia has formally handed over control of the Mogadishu port to a Turkish firm. Let's start in Nigeria, where Transcorp Hotels plans to start marketing its IPO on the 24th of September as it seeks to raise about $49 million for its expansion. Now, the firm will offer some 800 million shares to investors valued at 10 naira each. The sale will last for a week from Wednesday, followed by listing and trading at the Nigerian Stock Exchange on the 5th of November. Transcorp Hotels plans to use the IPO proceeds to develop two new properties, which will be managed by the Hilton Group in Nigeria's commercial capital of Lagos and the oil hub city of Port Harcourt. It expects construction to be complete by 2017. New hotels are springing up right across Africa despite poor infrastructure, and they all seek to cater to a growing middle class and an increasing number of tourists and business travelers who are coming into the continent. Elsewhere, a group of Dutch farmers has petitioned the European Court of Justice to allow them to attach $45 million worth of Zimbabwean diamonds as compensation for farms appropriated by Zimbabwe's government in the year 2002 thereabouts under the Land Reform Program. Now, the diamonds are auctioned at the Antwerp Diamond Trading Centre. Zimbabwe conducted its third international auction since restrictions were removed on the free trade of its precious stones. Here's CCTV's Farai Makutuya with the latest from Harare.
Proceeds from the sale of 500,000 carats of diamonds are under the spotlight once again. Last week, a South African company, Amari, had sought to attach the same funds to repay a debt owed by state-owned Zimbabwe Mining Development Corporation, ZMDC. Lawyers for ZMDC are confident they can win a reversal of this petition as they did last week. But it's not the only problem that Zimbabwe is facing in selling its diamonds abroad, which is proving to be a real minefield. US-imposed sanctions mean any US dollars destined for Zimbabwe can be intercepted in New York, and that is perhaps the reason why the country is now holding a sale locally in November. The government has defended the international auctions, arguing it was to help ascertain the gemstone's true market value. Farai Makutuya, CCTV, Harare, Zimbabwe.
Before we went to Antwerp and to Dubai, the price was for our gem carat was around $30 per carat. Antwerp and Dubai has raised that average for gem to 76 or so US dollars per carat. So it was mostly to find a price so that we are in a better position to assess whether we are receiving value of money or not.
Let's move on to South Africa. It signed a $10 billion nuclear power deal with Russia on Monday, and that effectively paves the way for the construction of 9.6 gigawatts of nuclear power plants using Russian tech. This, however, was a surprise announcement. It came from the sidelines of an International Atomic Energy Agency conference in Vienna, and it suggested South Africa is determined to move ahead with plans for nuclear power despite concerns about its ability to fund such plans. Its energy minister says the agreement opened the door for South Africa to access Russian nuclear power tech and funding while providing a platform for future collaboration as well. Let's get some more details now from Miriam Bemart. She's live in London. She's been keeping tabs on this particular deal for quite a while now. Miriam, let's start with Rosatom's September 22nd statement. The agency essentially said this deal would lead to the construction of reactors based on Russian reactor designs. Yet today, South African officials say this isn't a contract to build power stations. What exactly did these two parties agree to yesterday?
Well, analysts are saying the deal is meant to help South Africa with its power supply expansion, especially since it only has one nuclear power plant and heavily dependent on coal for its energy supply. Not to mention its electricity capacity is already near maximum, and that's why South Africa's nuclear power ambitions have attracted several proposals, of course, including French group Areva, which built South Africa's only nuclear plant, had also suggested providing a new generation of EPR reactors. Now, the South African government has also had offers from the U.S.-Japanese group Westinghouse, but until now, no official statements or announcement have been made.
Yes, indeed. But let's talk about the S word in a bit more detail. Does this deal in any way violate the sanctions put in place against Russia, given its activities in Crimea and the eastern Ukraine?
Well, you know, Rama, that remains unclear right now. Many analysts are worried about South Africa exposing itself to the sanctions and geopolitical tensions between Russia, Ukraine, and the West. You know, in fact, critics argue that the deal could also undermine South Africa's bilateral commitments on nuclear energy and, of course, other resources and sectors with other nations, and very much act against South Africa's national interests, limiting its ability to negotiate and, you know, build and manage its nuclear plants. Some South African officials are actually asking for more details on the deal that was allegedly signed, as you were saying, on the sidelines of the UN Assembly of International Atomic Energy Agency summit in Vienna. And experts are also warning that, you know, the Rosatom's technology is actually not necessarily the most advanced of the options for South Africa and could be less cost effective when you consider the cost per megawatt per hour compared to alternative options of power.
Indeed. But speaking of cost, I mean, the capital outlay involved here is massive, running into the tens of billions of dollars. How will these reactors affect South Africa's power prices?
Well, the idea is to make electricity prices more affordable. You know, new figures show that with over 15 million households, 2.3% of the population is actually now using more electricity, and, you know, more so than they did a few years ago. And households are, many of them, still struggling. That's why the 8 nuclear plants will have the capacity, or we've been told will actually have the capacity of about 9,700 megawatts to deal with the shortfall. But I spoke to experts who say the country, when you break it down, actually needs another 10,000 megawatts of power, especially in the next 15 to 20 years with a growing population. So critics argue that the new deal will cause more debt for South Africa, especially as the government actually tries to manage, you know, the high electricity tariffs that we already have, peaking at 32%, and making sure that households can actually afford electricity.
Indeed. Final question to you, Mariam. China and France, or rather firms from both countries, especially Areva, had expressed quite a bit of interest in providing the expertise and the reactors that South Africa needs. Can they still chip in despite this deal with Russia?
Well, it's very difficult to say, because right now the common consensus among experts is that, South Africa is a very attractive destination, especially with nuclear plants. But there are always costs and overrun costs. Let's not forget the South African government will be helping, its own struggling state utility giant Eskom with $4 billion, and also equity injections from the government to try to maintain its debt. So given that companies like Eskom have been forced to have scheduled power outages during winters and things like that, analysts are asking how any new deal with any of the new companies will actually ensure that households won't be left in the dark. So certainly they will have to take a stronger, more profound role in making sure that the consumer doesn't feel the price effect.
Indeed. More questions and answers here. Thank you very much for that. That's CCTV's Mariam Behmad live in London. On to Egypt now. President Abdel Fattah el-Sisi has established a council that consists of hand-picked Egyptian scientists who live both in the country and abroad. It includes the Nobel laureate Ahmed Zewail and renowned heart surgeon Sir Magdi Yacoub. Now, this advisory council has been formed to study unconventional means to solve Egypt's political, social and economic problems. To figure out exactly what the value proposition of this council is, Yasser Kim spoke to Dr. Mohsen Adel, the Vice President of the Council for Economic Affairs in Egypt.
Mr. Mohsen Adel, first of all, what is the aim of the new scientific council? مجلس علماء مصر هو متواجد بالفعل منذ تقريبا.
Our mission is to gather the best ideas and studies from Egyptian scientists and turn it into feasible economic projects that can help develop the economy and be profitable too. We're in the first phase, the gathering and research phase. We are working on everything: agriculture, tourism, mining, renewable energy and more. Next phase is to transform the chosen researches into projects and provide the proper funding.
مجالات العلوم العادية والهندسة ومجالات.
Egypt is facing an economic crisis. What are the main challenges you are trying to overcome in the council?
أنت على المدى القصير لديك.
No, Egypt's economic challenges are mainly: one, reviewing investment laws to be more attractive and updated. Second, draw up a short and long-term plan to rebuild the economy. Third, scrap bureaucracy altogether, or we can establish free economic zones with easier regulations, just as China did to avoid bureaucracy. Personally, I believe more funds for research are essential, not just in Egypt, but the whole continent. Budget deficit forces governments to give priority to other issues such as health and food, leaving no money for research. They don't know that research is the catalyst for development. Egypt just realized it this year, and the new constitution increased budget for research tenfold.
Are you working with the government on solving these issues? Is the government cooperative with your council?
The government listens well and is willing to cooperate with us. We are working together on plans that could solve sticking issues such as unemployment, subsidies, budget deficit, and fall in revenues.
With economic challenges facing Egypt, are you optimistic that Egypt is on the right track?
I'm optimistic. We are on the right track and have potential for huge growth, but we face a main setback. Political instability in the whole region prevents more investments and tourism inflow, the two most important sectors for our development.
Mr. Mohsen Adel, thank you very much for joining us.
Let's make a quick run through the equity markets here for you. Interesting developments right across the board. In the NSE 20 share index in the Kenyan capital, Nairobi, multi-year highs yesterday. Today, however, it pared back those gains. It's down about half a percentage point. Investors are locking in those gains. The CMA, however, did approve NIC Bank's rights issue. It's looking to raise about 23 or so million US dollars. A weaker economic data from Germany and France dragging down South African stocks. Over in Nigeria, Access Bank will be looking for shareholder approval for rights issue on the 13th of October. For now, however, its shares are essentially frozen. The NSE in Nigeria ended the day at a 4-month low. We've got plenty more coming up. We're looking at Somalia's handing over control of the Mogadishu port to a Turkish firm. And water ministers from Egypt, Ethiopia and Sudan, they've signed an agreement over the construction of a controversial dam in Ethiopia. We'll have the details next. Africa is on the move. It's home to 7 of the world's 10 fastest growing economies. We help you make sense of the fast-changing African business landscape. We take you where the business is happening. Welcome back to the program. 15 minutes in, you're still on Global Business Africa. Somalia's federal government has officially handed over the management of the Mogadishu seaport to Al Bayrak. It's a Turkish company. According to the head of that firm, Ahmed Salim, 55% of the seaport's income will go directly to the government. The remainder will go to the company. The Turkish firm will fork out about $80 million to renovate the seaport, whose facilities haven't been repaired or upgraded for the last 2 decades. Somalia's Transport Minister Yusuf Maulem Amin denied claims that some of those laborers will lose their jobs after the takeover, adding that income from the seaport is actually forecast to double. Now, Abdinur Mohammed Ahmed is a Somali analyst and economic affairs expert. He's live in Mogadishu with us right now. Mr. Mohammed, tell us, How long will this concession deal with Al Bayrak last, and what are the forecast revenues to Somalia's federal government over the period of this contract?
Thank you for having me on this program. And if I come to your question, yesterday 15 parliamentarians have tabled a motion against the Al Bayrak, who is a Turkish company, which wants to manage the port over the next 25 years. And it depends on how the parliamentarian debate and screen this motion, and later they will vote. So it depends on the outcome of the parliamentarians.
Indeed.
Tell me, second part of your question, there are other donors who supported the government, mostly from Western countries, and Turkey, which is also giving a direct aid to the government. So there will be financial complications, and we must acknowledge that. But there are another sources the government can get funds right now.
Indeed. Tell me, sir, is there any investor interest in similar concession deals to rehabilitate the ports of Bosaso or Berbera or Kismayo?
Definitely there should be investor interest, but currently we don't have any information about that. But what we can confirm is that there is a Turkish delegation who visited from Bosaso, which is the capital and the commercial capital of the semi-autonomous region of Puntland. There is also a Turkish delegation from Tika who visited Kismayo, the Juba administration capital, earlier this month. If this kind of delegations continue to flood those cities, those port cities, there could be deals in place, but currently we don't have any interest. Only Al Bayrak is the only company that is interested to invest heavily in this sector.
Indeed. There are concerns about potential job losses now that the firm is essentially being run by a private company. Has Al Bayrak addressed these concerns?
And although dock workers are claiming they will lose their jobs, and we estimate there is 5,000 low-income families who heavily depend on that seaport. But Al Bayrak has repeatedly said that it will keep all those employees and they will not lose their jobs, although there is some concerns and whether the Al Bayrak will continue to pay the wages they used to get from Benadir company, which used to run the seaport. But they have to address before it is too late, and there should be a way out because those low-income families need financial help.
Indeed. We'll have to leave it there for the time being. Thank you for your insights. That's Abdinur Mohammed Ahmed. He's a Somali analyst and economic affairs expert who was live in the Somali capital of Mogadishu. Now, water ministers from Egypt, Ethiopia and Sudan have signed an agreement over the construction of a controversial dam in Ethiopia. That deal essentially allows 2 intensive studies to be carried out on the project. The $6.4 billion Renaissance Dam is being built on the upper reaches of the Nile River, which is Egypt's primary source of water and a very sensitive point for that country. Ethiopia says the project is necessary for its national development plans, and that so far has raised alarm bells and red flags waving in Egypt, which relies on the river for almost all its water needs. In our What's Hot segment tonight, Kirum Challa unpacks the details of this deal.
The construction of this dam, capable of generating 6,000 megawatts of electricity, has been the cause of a tussle between Ethiopia and Egypt for over 2 years. It now looks like the confusion is clearing up. The tripartite Technical National Committee agreed to create more trust and confidence among the countries on the understanding that the dam under construction would be harmless.
With the water affairs ministers of the 3 countries, Egypt, Ethiopia and Sudan, during the first meeting of the Technical National Committee, have witnessed the successful deliberation and accomplishment of the first meeting that will forge and strengthen trust and confidence among the 3 countries.
Following an invitation from the Ethiopian government, the Egyptian Minister for Water, Hossam Mohammed, together with his Sudanese counterpart, visited the construction site of the Grand Renaissance Dam. Hossam Mohammed noted that the dam had no harm as earlier anticipated.
I can say no storage of water up to now. As some people said in the past, there is a storage of water. I can say no storage of water yet, maybe not less than 1 year at least. The second thing, we have some discussion with the designer and some engineers in the site, and the discussion was helpful and fruitful.
Since the beginning of the construction of the Ethiopian multi-billion-dollar hydro dam on the Nile, Sudan has been an ardent supporter of the plan. Now, the country's water minister says the dam should be a regional project.
We have to transform this project from an Ethiopian project into a regional project. This would mean that any benefits to the three countries shall be shared, and any significant harm whatsoever has to be well understood, mitigated in a most appropriate way that will not detract from the overall benefits.
At the fourth meeting of the International Panel of Experts in August this year, it was decided that a tripartite national committee be formed from the three nations. This committee will be responsible for bringing the nations closer on the issue of the construction of the dam. According to the agreement signed between the three water ministers, an international consulting firm will be hired to undertake 2 safety-related studies over Ethiopia's dam. And until that result comes out, the Technical National Committee will be meeting in rotations in the three countries. Their next meeting will be in Cairo in about a month's time. Grumdalas, CCTV, Addis Ababa, Ethiopia.
Let's make a quick run now through commodity prices. A fairly interesting day of gains across the board. However, watch out for oil, and this is the reason why. Libya's output is up to about 800,000 or so barrels of crude a day. Why? Because the El Sharara oil field is now back online. However, at the same time, Nigeria's export volumes are rising. It's going to be kicking out about 1.91 million barrels of crude every single day in November. The figure for October exports is about 1.8. So to essentially sum this up, we've got more oil going into the market. Demand, however, isn't where it needs to be. Those prices, they're going to take a nosedive. When we come back, we'll be looking at oil money. Just not the sort you think of. Rwandese companies carving a niche in essential oils. We'll have the details next. Welcome back. You're still watching Global Business Africa. A Rwandese company seeking to become the first in that country to produce non-synthetic homegrown perfume. The company is already a few months into the production of essential oils, and it aims to venture into the manufacture of raw materials that will go into, among other things, medicines, soaps, and even candles. In Grassroots tonight, CCTV's Peter Akaba visits the outfit's small factory in the outskirts of Kigali in Rwanda.
A long, dusty country road, villagers going about their business, and lots of greenery. That is the setting for one of Rwanda's newest and most promising small businesses. This fledgling company is in the business of manufacturing essential oils. Oils derived from aromatic plants that carry the heavy sweet scent of the plant that it is made from.
This is eucalyptus oil. It is used to make a lot of things like drugs, cosmetics, and in laboratory education.
A variety of herbs dominate the ground outside the small shed that houses the factory. Among them geraniums, lemongrass, and even the Mexican marigold. This grows as a weed in many African farms. A lot of research has gone into their work.
We have done a lot of research using trees. I started here in Rwanda, and so far I have researched 18 trees that you can get oil from.
The biochemist says he learned his trade in Marseille in France, a trade he practiced for a solid 13 years. Now retired, he says his research has enabled him come up with a variety of products whose popularity is starting to grow.
We make a lot of products like candles to repel mosquitoes and flies. They are very popular in restaurants, and now we sell to the universities. We, however, are still looking for markets to expand into.
Besides these candles, which are now a mainstay of this operation, the company is also venturing into perfume production with a homegrown, fully organic product expected off the pipeline over the next 6 months. A decision the company says will enable it to tap an even larger market. They say the hallmark of an entrepreneur is his determination to succeed no matter what the challenges or circumstances as they may be. And so it is for this one company here in Gasabo in Rwanda that is setting out to tap the international markets in essential oils. Peter Okaba, CCTV in Gasabo in the outskirts of Kigali, Rwanda.
Quick run through the currencies here for you, and this kind of sort of takes us back to the first story that we had, the South African rand pulling back and from, of course, the 8-month lows that we saw a little earlier. It's posted a few gains, a bit of calm, incidentally, coming through into the market, partly because of the announcement of that deal between South Africa and Russia on nuclear power, and the clarification coming out today that this isn't just about building power plants. Should be interesting to see how this plays out in the next couple of days. But that's pretty much it on that front. Just before we go, however, in Global Business tomorrow, Egypt will be sending the largest ever Arab delegation to the annual Chinese Canton Fair. We'll have the details on that. And at the same time, the Zimbabwean government has announced a livestock support scheme, and it's investing over $50 million towards it. What does that mean for small-scale farmers and beef consumers? We'll have all the details and analysis right here for you tomorrow. But that's it for this edition of Global Business. Send your feedback to globalbusinessafrica@cctv.com. Check us out on Facebook and Twitter as well. The news continues over there 24/7. But that's it for this edition of the program. Thank you very much for watching. I'm Ramanya.